Markets have been choppy. There's a range of different competing narratives at the moment on markets, with participants uncertain about where do things head from here. There's been plenty of news over this past week. We got some insights about the Federal Reserve's plan for balance sheet unwinding and quantitative tightening. There was a range of different news as well surrounding commodities, as well as Elon Musk getting up to some fascinating things as he always does. Hello, welcome to this week's weekly wrap. We've got a lot to unpack, so park up with a cup of tea, enjoy a coffee, and welcome to the video. Where do we start? Volatility has returned. It was a few days up, a few days down over this past week. We can see here there was plenty of news on the right, but we saw the S&P 500 was down by over 1%, and the NASDAQ actually underperformed that, with bond yields surging through that 2.5% mark on the 10-year benchmark. We saw technology being rotated out of once again, and the market's having a more defensive tilt over this past period. And what it looks like at this stage is the market isn't convinced with this counter trend rally. It's waiting to see if the past period that was the bottom and whether we're able to continue on an upwards trend, or was that just a bit of a counter trend rally and potentially we may be putting in some lower lows up ahead. We can see here the fear and greed index is staying around that neutral rate. We know that just a few weeks ago we were below the 30 mark, even at stages trading in and around that 20 mark on the extreme fear side. But we're now neutral, and I think this speaks to the uncertainty of everything that's playing out. We know that we have earnings season starting. It's right upon us, and earnings season is honesty season. It's a chance for analysts, investors, economists to get some insights about the state of how everything is playing out and potentially the pathway up ahead moving forward. We can see here the VIX has traded in and around the levels it's been at. It poked its head just above that 20 level, but there's not too much to report on that front. I would be very keen to know your thoughts on it all, however, so drop in a comment below what you think about the current state of the market and where do you think things head from here. And the standard discussion, as you guys know, I'm just a bloke on the internet who loves talking about the markets. Obviously not a financial advisor, and nothing we discuss is financial advice. Do hope, however, it is a fascinating starting spot for you to do your own research from. And so as we've been starting these weekly wraps with recently, we'll do a bit of a recap on the Ukrainian situation, because what's playing out in Europe has the ability to have downstream implications globally. And as always, first and foremost, it is a humanitarian discussion that's the most important. Economic market implications that come, they're a distant secondary. And of course, the focus is, as we always say, hopefully on a swift and safe resolution. But there has been some insights about that over the past period. There actually was a major update over this past week. We can see that Russia is actually withdrawing from the north. We know there was a focus around the capital of Kiev, but now it looks like they'll be focusing their offensive on the east. So this is something that we're still waiting to see how it's playing out. Nobody's really sure about what's happening, but it is a major, significant focus at the moment that the north is being withdrawn from, and this focus is transitioning more so towards the east. We know here that there have been energy sanctions that have been considered over this past period, but with some really difficult scenes coming out over the past couple of weeks, there is now a bigger focus on energy sanctions. We're starting to see the EU bring in potentially coal import sanctions, and it's going to be interesting to see what the rest of the Western world does now over this next period, particularly if we continue to see this dragging out. As mentioned, it looks like it may not be a swift resolution with this battle for the East. If it does continue on, it may look like it will drag out. We know that there's still negotiations and discussions playing out. We're hoping there is a swift resolution, but of course there are a range of different uncertainties and factors playing into it. So we'll wait to see. We'll continue to provide updates on this, but hoping that there is a swift and safe resolution as quickly as possible. And then flowing on to the next discussion, this surrounds interest rates. We know that the inflation narrative, rising interest rates, this has been a narrative playing out on markets for the better part of 12 months. We saw the first federal rate hike last month in March. But of course now the question is, how fast will that rate rise be for this cycle? And also, what's happening with the balance sheet? The balance sheet is currently sitting at around $9 trillion, which is, of course, it's been expanded rapidly over this past period. And we can see now that the Federal Reserve tightening sequence is really starting to take shape. Lael Brainard provided some insights to the markets over the past week. It was interesting to see the market reactions to that. It looks like the runoff for balance sheet unwinding and quantitative tightening is going to be at around $95 billion per month, potentially starting as soon as May. So that is quite soon. Looks like it's going to be a faster pace than the previous recovery, and we did see US 10-year yields soar through that 2.5% mark over this past period. We know there was an inversion over the past couple of weeks, but we've now seen the longer dated yields continue to push higher, so it's going to be interesting to see if we see that yield curve continue to steepen, especially with all of the discussions about potential recessions that are starting to come through from analysts and economists. I do think one thing that's worth noting as well that's interesting is the Australian market as well, with some RBA minutes and notes coming out over the past period, has started pricing in faster and higher rate rises, potentially as soon as June on the Australian front. So that is something to monitor and watch because it has implications not only for the markets, but we know that the housing market is a significant component of the Australian economy as well. So that will have implications on that front too. And then coming back to commodities, it seems like commodities have been all the rage over this past period. What's been interesting over this past week is concerns around inventories and supply. We all know the discussion surrounding the supply and demand dynamic. We've talked about it before on the channel. But what we have seen is a note recently that LME inventories on the London Metal Exchange are plummeting to record lows. And you can see an insight here on the visual about just how low they are currently sitting. We know that Joe Biden's critical minerals announcement drew excitement over the past week. It catalyzed a lot of focus and awareness surrounding many of these EV battery materials. If you are wondering what that announcement was and what it means for many of these EV battery minerals, we'll leave a link up above to some of those videos because we did a video deep diving and unpacking what that announcement was. On the same type of dynamic as well, Canada provided an interesting announcement over the past 7 days that they would also be investing $2 billion Canadian on a mineral strategy for the EV battery minerals supply chain. And we're starting to see this increased awareness from many governments around the world. It is worth noting that a fascinating dynamic on the Australian front is the ASX has actually been outperforming many of the global indices around the world, from Asia to Europe to North America. And a lot of this is contributed to because of the significant commodities and energy weighting that we have on our indexes. And then bringing it all back to an interesting piece of news, I'm sure that most of you are familiar with the busy week that Elon Musk has had. Not only was it on his flagship Tesla company, as we're all familiar with, but he decided to take a large stake in Twitter, as you do. Elon Musk purchased a 9.2% stake of Twitter, is now the largest shareholder, and in fact he was invited and now sits on the board of directors for Twitter as well. But on that other side, Tesla Deliveries came in. We know that deliveries always precede the financial statements on the quarterly, but they give a good indication about how things are tracking. Tesla Deliveries came in at 310,000, a slight beat on consensus estimates, but basically in line with it. It's interesting to note the significant outperformance compared to many of the incumbents, whether you're talking about GM or Ford or some of these other car companies in a tough market. We know the Shanghai factory closure played out over this past period. There's still the semiconductor shortage, rising input costs, rising power costs, and yet Tesla was still able to provide a record deliveries, which is a big tick and continued validation for the mission that they're on. Another interesting note as well was that Cyber Rodeo event was there for the launch of the Austin, Texas Gigafactory. We know that they're building out gigafactories rapidly. Giga Berlin came online over the past period. Now they had the Cyber Rodeo event. It's going to be very interesting to see what's up next for Tesla. If you haven't seen any of the videos over the past week, we did deep dives both into Elon Musk taking a stake into Twitter, as well as the Tesla delivery numbers. So we'll leave links to those up above that you can check out after this one, and I'm keen to know your thoughts on it all. And then the election cycle begins. Before we talk about the election cycle, if you've enjoyed the video, don't forget to hit the like button. Feel free to share it out. We make a daily video each and every day, so if you haven't yet, make sure you've subscribed, turn your bell notifications on. You won't miss any of our daily episodes, and we'd love to have you join the community. The election cycle. We know that the election cycle has the ability to be formative for, of course, policies and then continued downstream implications from those policies that are flowing out. It's going to be interesting to see how we go in the run-up towards the elections, and also keeping an eye out on some of those policies and promises that come out, especially because many of them will have the ability to impact markets and individual sectors as well. It's worth noting that the election in Australia is looking likely to be sometime in May, but there is another major election playing out around globally as well, which is in France. This has the ability to be quite significant and a really important one for the broader European Union. So it's worth noting both the Australian and the French election cycles are going to be underway in this upcoming period. And of course, all of that flows through to an earnings season that will give us an insight into the state of the current markets. There's a lot to unpack. There's a lot to discuss. Let us know your thoughts on it all. And we look forward to catching you on one of our upcoming daily videos. Thank you so much for joining us. For now, stay well and happy investing.